and welcome to A Year of Career, 52 Practical Answers to Your Questions. I'm Erin Wolfram. I own and operate Career Advantage and Career Advantage Golf, where I help professionals feel more confident and prepared throughout their job search. So I help folks with resumes, cover letters, LinkedIn profiles, mock interviews. I also help with personal and business portfolios and websites. But each week on this podcast, I answer one question from the public. And today's question is, what are some tax-related tips for starting a business? And by all means, I am not a tax expert. I've started a couple of businesses, and I know that's what a lot of people are thinking about doing as they consider career transitions. So I've brought in a special guest who is an expert, Ben Miller, to join us today and share his expertise. So Ben, would you please go ahead and introduce yourself and your business?
Erin, thanks for having me. My name is Ben Miller. I'm a CPA here in Lawrence, Kansas. My area of expertise is tax and accounting. And I've been in business now for about 11 or so years. So.
All right, wonderful. And over again on this podcast, I talk about networking, and that's actually how Ben and I met. So just another plug for networking. You always want to get out there and meet new people. So thank you so much for joining us. And if you want to just kind of dive right in and start with some tips that you have, I think that can get our conversation started.
Sure. To your point, Erin, there's a couple things that people should do when they elect to kind of go out on their own, whether it be full-time or whether it is a side gig. Most importantly is that you should probably find an accountant or at least speak to one because every year it happens where I have a new client or a prospective new client come to me and say, hey, I started this side hustle or this business on the side. And here's what I'm thinking I'm going to end up doing, or here's what I end up doing for the year. Here's my tax stuff, prepare the tax return. And that's not the best way to go about it. You don't want to just kind of wing it. It's really ideal to speak with an accountant beforehand so you can kind of project how much tax you'll end up paying from the profit in the business. And I think that's the number one thing is find an accountant. If you have an idea how much profit you're going to make, the accountant will be able to kind of tell, okay, here's how much additional tax is going to be added to your return because of your side gig, your side hustle. So I can't tell you, it happens every year. I probably have 3 or 4 or 5 people that are in this boat. The year's done, and then I have to relay the bad news because they didn't save any of the money, and so they have this tax bill. And then you have interest and penalties, and it's real hairy, and it's not ideal. It's not what you want to do. So I think number one, Erin, definitely find an accountant and at least speak to them because, again, they should be able to run some sort of projection for you for the year to see, again, what the tax impact is going to be from the side business or side hustle that you have. I think, again, I can't stress that enough, is just find an accountant, talk to them. I mean, I have quite a few clients that are in completely different lines of businesses. So if someone comes to me and says, hey, I'm looking to do X side hustle in X line in X industry, I'll have some sort of idea typically about things to look out for, how realistic it is that they'll make money the first year, that sort of thing. So they'll have some sort of bead on again how successful this side gig might be in the first, second, even third year. So I think that's number one, is definitely find an accountant. They can help you out with what your tax liability might be. And I think probably the other kind of important point here is before you just kind of start doing business, it probably makes sense to talk to an attorney because there are different sorts of entities that you can be. And so each of those entities has certain tax characteristics. Some are very good, some are very bad. And so one might be bad in this particular entity, but that characteristic might be better in this sort of entity. So, and not only that, but the other thing is talking to an attorney. They might help you or advise you set up an LLC. You want some limited liability, right? You don't You don't want to start a handyman job, have a hammer fall off your truck going on the highway, it hits the windshield of the car behind you, and they hit the median, and something bad really happens, right? They can sue you for that sort of thing. And an LLC, and again, this is worth speaking with an attorney, not only set up an LLC, but also you can talk to an attorney about sort of entity that might be good for your business, your side hustle. That's the other thing, is what sort of business structure or which type of entity makes sense for your side business or side hustle. So I think that's the other thing. You just don't want to do this shooting from the hip. I mean, you want to have some sort of game plan. Okay, this is the entity that's best for my business. And too many times, I mean, 80% of the time I see it where people just kind of leave the house one day and they're doing a side hustle in the evenings or on the weekends. And it's not what you want to do. You want to speak with an attorney, speak with an accountant, because they can help kind of show you the road you need to go down to make sure everything's kosher, everything's correct, and you're doing everything that you should be doing.
Absolutely. And I think, a lot of people don't realize that they need to save money back for taxes, right? Because you don't think about that until January, right? Typically. But you need to be thinking about it the entire year, and you need to be saving money every single month to anticipate, okay, I'm going to have to pay this next February or March or whenever it is. And I think that you're right. A lot of people just don't realize that or think about it. And so, talking to a professional in advance to kind of estimate, what percentage or how much they do need to save back, so they have that in an account ready to go. And, if they oversave, fantastic, right? I mean, if they saved too much and they don't have to pay as much in, I mean, that's just a pleasant surprise, right? But the alternative, if they don't save, or they don't save enough, and then suddenly they have to come up with $8,000 that they don't have, that's a problem.
Yeah, I mean, that's what I try to help my clients avoid. And I tell my clients, if that happens to a prospective new client and they're in that boat, I say, hey, this is going to be the painful year, because not only, using your example, Erin, do they have to owe $8,000, but guess what? You probably need to start making quarterly tax estimates, right? So April 15th, June 15th, September 15th, and then January 15th of the next year for the fourth quarter. And what happens is, I call it getting whipsawed, because not only do you have to cough up the $8,000, but then you need to cough up another $2,000, right, to pay in the quarterly estimate, because the tax code says we need to start making, or it makes sense to start making quarterly tax estimates. And assuming, in our example, the business does the same, you need to make the $8,000 in quarterly payments. So all of a sudden you need to come up with 10 grand come April 15th, right? And so that's where it gets real here. And then $2,000 each additional quarter. So that's kind of the bummer when people, again, don't talk to an accountant or don't know what they're doing. And I have to relay the bad news. It's not a fun thing. So anytime I get a client like that, I look over their stuff real quick and I say, okay, this might be bad news. I'm warning you now, because I do not want to be the person to ruin your day when you have to write that $8,000 check. So that you're not expecting. So I don't want to say I'm terrified of those clients, but I try to be upfront with them and say, it would have been better if you came and talked to me last year before the end of the year. So at least we'd have a clue, and you'd know how much cash you need to have on hand. Now, sometimes they're very forward looking, and they know that there's a significant tax bill, but generally speaking, most clients aren't, or most prospective clients in that boat don't have, or don't save as much cash. They may have saved some cash, but certainly it might not be as much as they thought the tax bill would be. So
exactly. No, great advice. And I was well prepared this year, and got my taxes done in March and paid everything. But then it still was a little bit of a shock to have to pay that first quarterly April 15th. I mean, again, I was prepared, but I was thinking, I just paid this last week. But just when the taxes for the previous year aren't due until April 15th, if you don't get them done until like late March, then you do potentially have two payments back to back. So no, that's great advice. So you kind of already went into this as you provided some of your tips, but are there any other common errors or areas of improvement that you see on a regular basis with your clients or small business owners?
So happens quite a bit as well. But I think if someone does start a side gig, sometimes they might not have the information summarized in an easy way for me to put it in their return. So sometimes there's a lot of back and forth. If they don't have all their stuff together and summarized. I mean, I had a client in February, a new client, and they had 5,000 transactions that they just downloaded from their bank account, and they just said they wanted me to use that to prepare the Schedule C for them, the sole proprietorship form inside the 1040. And I said, this ain't gonna happen. I need the revenue broken down. I need expenses summarized. I can't do anything with this. And so I think, to your point, Erin, the common area improvement is just, I think, the record keeping. People don't do a good job of doing that and keeping everything summarized, because it's not just for tax accountant, it's also for them, because they can see how their business is doing throughout the year, right? They should always be able to look at it and see a snapshot of what the business is doing. Now, so typically what I see is, what I recommend my clients is, if they have a side gig or a small business, definitely set up a separate bank account. And so some of my clients are really small that may only have 5 to 10 to 15 transactions a month. They just give me their bank statements, and then I just have an Excel spreadsheet template that I can just plug the information in. So as you can imagine, January is one column, and we're just tying to cash, right? And do that through December, and I have a snapshot of what the side gig has done throughout the year. If the business is more significant in terms of transactions and it doesn't really make sense to do that, there's always QuickBooks online, where you just link up your bank account to QuickBooks Online. QuickBooks Online just pulls in, and there's more than QuickBooks Online. There's Wave, and there's some other platforms out there. But what happens is they just pull the bank information in once you link up the bank account to it, and then you just put it in the right bucket. And then I have access to it, so that I can just go in there, and if I need to review it, fine. But basically at the end of the year, QuickBooks, whatever accounting platform that the client's using, will just have the income statement, the balance sheet there, things I need in order to prepare the return. So I think, but again, does someone need to pay the $25 a month to QuickBooks? Again, it just depends on the amount of transactions. Some clients like it because it does make it easier on their end, because QuickBooks, right, they have an income statement, balance sheet already set up. They don't have to worry about that. They have a real good idea of how much money the business is making. But generally speaking, for someone who's doing a side gig or a side hustle, in addition to something else, chances are they probably won't have enough transactions to use QuickBooks, at least not right off the bat. But in those cases, Excel is more than does the job. And I've sent some clients a template and said, hey, this will save you money on me preparing the returns if you put all this stuff together at the end of the year, or if you put together monthly, right? Because they get the bank statement, they plug it in, boom, it's kind of a quick and dirty income statement, balance sheet for them. So that's probably the thing is, hey, make sure your record keeping is good. Mileage is another one for small businesses and entrepreneurs. Mileage is one of the biggest deductions a lot of small business folks will have that are just kind of doing something on the side. So because you're driving around, and the mileage deduction is pretty generous. So that's another big thing is the mileage, and then also making sure that the bookkeeping and the financials are somewhat put together. So
definitely have some organizational systems for sure.
Yep.
So just as an example, for one of my businesses, I use QuickBooks, and the other one I just use an Excel spreadsheet, and it all depends on like how complicated it is, like you said. And just something else that I have found extremely helpful, it's not working right now, so I do need to figure out what's going on with that. But in QuickBooks, there's actually an app where it will track my business mileage, which is really cool. So then that syncs with all my other data. And so when I'm ready to do taxes, I can just print off that mileage report, and it's just, automatically done, through the app, which is really fantastic. So there are a lot of, cool tools like that that can help with that organization and not make it, more of a hassle or a burden, right?
Right. And it's I mean, all that stuff is real helpful, but yeah, it does that for you. So you can just hit a button at the end of the year, print out the mileage log, right? The mileage statement, because your account's going to need it. And then, like I said, also, you're not having to put together a shoebox full of receipts, trying to get, because your accountant needs it, right? That's the other benefit. So,
Yes,
yep.
I am sure that's probably one of your worst nightmares, is a shoebox full of receipts.
Well, I try to be upfront with clients. I said, I can do this, but you're going to pay me more, because I mean, it's to say. So yeah, because at that point, I'm just billing by the hour to some extent, right? I mean, because if you're wasting my time, I got to bill you for it, right? So it's kind of the way that. So
yeah. Well, we've kind of hit on some of our other questions already, you know, talking about just advice and tools and things like that. So do you have any other recommendations on, you know, deductions? Like you mentioned mileage, that might be something that some people didn't even realize, you know, is a deduction that they need to be tracking. Are there other things like that you find yourself regularly telling people, like, oh, you know, you should have been tracking this, or you should have been, you know, organizing this? Are there things like that maybe people aren't as aware
of? So I think the mileage is probably the biggest one, and especially for self-employed, for sure. And again, that gets back to sort of entity that you choose to be with your side hustle. That's probably the biggest one. The other big one, though, I see, Erin, that people don't think about is the home office deduction.
Yeah, that's the one I was thinking about. So I was hoping you mentioned that.
Yeah, so a lot of times I'll get someone that has kind of either gone out on their own, or is just kind of a side hustle, tipping or sticking their toe in the water just a little bit while they keep their W-2 job. And I say, hey, well, home office deduction, they don't even think about it. But yes, if you have a dedicated space that 100% of the time throughout the year is used for your business, you get to deduct that. The percentage of whatever that office is, the square footage of your house, you deduct it. So for example, if you have a 2,000 square foot house and the home office, say 200 square foot, that's 10%, right? So 10% of the mortgage interest, real estate taxes, house insurance, utilities, internet, cable to the home, any repairs and maintenance, all that stuff you get 10% of as a deduction against the profit of the business. And if you're self-employed, I mean, you're paying not only ordinary income tax risk, but you're also paying self-employment tax, which self-employment tax 15%, 15.3%. So you're paying that on top of, say, let's say the 22% rate federal, 5% for state. So you're looking at 27% for income tax combined, federal and state, and then you're looking at a 15% for self-employment tax. So as you can see, it really adds up. And so that's where every deduction helps, and the home office deduction is one that a lot of people don't think of. So that's probably the other one. And sometimes they have to go back and put that information together, but I tell them it's worth it, because every dollar you're saving 43 cents on the dollar, possibly. So it's a no-brainer. So I think that's probably the thing that I think people miss out on the most, or things they don't think of, I guess. And probably the final thing is, to your point, Erin, is that once the return's done, hey, what can we still do? December 31st is struck. Let's say it's March 31st, working on 1040 for the client. Is there anything else we can still do to reduce that tax liability? And you can still make a retirement plan contribution. You can still make an IRA contribution. And if you're self-employed, you can make a SEP IRA contribution. That's more than just the regular $6,000 per year. That can be, it's roughly 20% of whatever the net profit is of the sole proprietorship of the side hustle. So again, the software helps me out with that, but the client could contribute up to that amount or less than that, obviously, and then that amount just shows up as a deduction. So they might take their refund and just say, I'll stick it into an IRA and I'll bump up my refund by, 40 cents on the dollar for every, that's a bad example, for about 27 cents, because you still got to pay self-employment tax on the profit, but it only reduces the income tax. But beside the point, so I would say those three things, the mileage, the home office deduction, and then December 31st is struck, you can still make a retirement plan contribution or reduce your tax liability. So, and finally, Erin, there was one thing I wanted to mention too, the biggest piece of advice for our business. The final thing I want to mention is you got to find a banker. find a banker that either it's your personal banker or a commercial banker. You got to find someone that can help you out, because if the business starts to take off, you might need to borrow some money. It's good to have that person already lined up that you're comfortable with, that knows about your business. I think that's probably the other thing I would recommend to people, especially if you're in sort of a capital intensive business that requires money up front. If you see an opportunity, that's the other thing that I think people need to have lined up is make sure you have a banker that can help you out if your business needs money. If you start to grow like wildfire and there's an opportunity, I mean, you might need a loan. So, and it's good to have that person lined up.
Absolutely. So, I think that if anyone is considering a side gig or starting a business, we've kind of said this over and over again, try to plan as much in advance and talk to professionals to figure out what you need to do, so you're not trying to do it like in the moment, but you've actually prepared more. I know in last week's episode, we talked about the Small Business Development Center. Most cities have something like that. That's a free resource that can help you tap into all of these things that Ben mentioned, accountants, attorneys, bankers, all of those who specialize in small businesses. And so I highly recommend, tapping into a resource like that also just while you're in the planning stages. So thank you so much, Ben. This has been extremely helpful. It's made me realize I'm doing a lot of the right things, which is good. A lot of the things you said sounded like deja vu. I'm like, yes, I did that. I did that. I did that. So that's all good. So if folks wanted to get a hold of you, Ben, how would they do that?
So I have a website, millercpallc.com. It's got all my contact information on there. And if you have any questions, I'd be happy to talk to them.
All right. Well, thank you so much. And if any of you out there need help with career development, you can always check out my websites. They're careeradvantageresumes.com and careeradvantagegolf.com. I also have social media on Facebook, Instagram, and LinkedIn. It's at Career Advantage Resumes. And on Twitter, it's Advantage Career. So thank you all so much for joining us. Thank you again, Ben. Great information. And we'll see everyone next week. Thanks a lot.